Hey folks, welcome to the channel. Happy Monday. We are looking to capture premiums. One thing of note before we get started, this is not financial advice. Your results will vary. This is used solely for educational purposes only. Please do your own due diligence when you are doing anything risky with the stock market. With the disclaimer out of the way, we are now going to look into what I have done this past week. So I went ahead and sold a few cash secured puts at the 302 level. As you can see here, I got $1,000 of premium, which is pretty awesome. I also sold two AVGO Broadcom cash secured puts at the 345 levels. Both of these were pretty awesome as well. Got me $1,400 for doing absolutely nothing. I just wanted to go ahead and sell these because they were going ex-dividend on today. Today's their ex-dividend date, and I will be collecting a dividend on them as well. So we got a little bit of premium from that last week. So we have to now turn these around that we got assigned on. So we're going to go up here and we're going to look at all of the puts that we were assigned. So it looks like we were bought additional two CLS at 300. So we have basically 300 shares of CLS at this point. And we also have AVGO, the two that we talked about. A couple of my Robinhood calls expired out of the money, so I'll have to reinitiate those as well. And then down here, we're going to go ahead and look at anything that we could potentially sell from the 290 put that was expired. So we have a little bit of cash to play with, so we can figure out what we want to invest in next. All right, without further ado, let's go ahead and get into it. Awesome. So here we have our market information. As you can see, this is great for covered calls. CLS is already up into the money where we want to sell this. So we're going to actually get pretty aggressive with this because I don't want to hold it. I want the interest from holding just the actual cash secured put, or the interest that I'm going to get from the account. I think this is going to rally beyond much further than this, but ultimately I'm just going to sell it where it is now. So let's go ahead and see the option chain here, since it's doing so well. Get into here. Right. We got our option chain. We're going to just do calls. We have all the strike prices. And that's the other thing about me. This is my first options video, but I only like to sell options out week out in advance. I don't want to hold anything long term. I want to kind of control my own fate. So here I'm going to figure out what I want to do to kind of capture that momentum from the stocks from before. Again, if I were doing this and if I was smart, I'd come down here somewhere to the 22 delta or 26 delta and get some more premium in there as well. But I mean, I just don't want the difference of this $180 per contract. So I can come down here, I can sell between at 660 and buying at 920. So what I'm going to do is I'm going to ask for a premium at this, because if it does go up, I can at least get a little bit more money out here. So let's figure this one out. I'm going to go ahead and say sell this one. Right. Let's go ahead and preview order in a trade ticket. Alright, let's move this up here. It's already at 303. So this is already well above the ask, which is pretty awesome. And we're going to do selling a call, sell to open. Expiration date strike is 302.50. Again, we're just writing a strike at the price that we were assigned at. There's a little bit of premium here. We were assigned, as you remember, two puts at the 200 level, at the 300 level. So we have two puts there. So we're going to be making $500 just off that appreciation. We're going to sell three of these. And again, I can always dollar cost average this. I can sell one at the 302. I can do this a little bit more to 305, 307.50, 310, and just make a little bit more money. But what I'm going to do here, though, this is going to be up here. So now we're going to go into getting $2,700 instead of just the $920 or $660 that's saying that it was kind of bid for. Because this is clearly going up. The mid is 790, so I should be selling them around 790 if I want to sell them quickly. But I'm going to get a little bit greedy here because I think this is going to go up pretty well today, and I think it's going to probably get assigned at least my asking of 920. Probably could go even higher if I really wanted to, but let's just stay consistent. So I'm going to go ahead and preview this order. Here we have Celestica 302.50 at 3 quantity, sell to open. Let's see what we're doing here. Alright, let's go ahead and place. I'm just trying to get out of this trade at the end of the week. In case something bad happens, I'm capturing a lot of good premium to manage that risk. Let's go ahead and place that order. It's orders received. It's awesome. And now we can go and enter another order strikes. We already got the dividend, so that's a nice little chunk of change. It's not a lot. Alright, so Broadcom has gone up significantly. So let's go ahead and sell that. Sell to open. Call. Quantity 2. We're going to do an expiration of a week out because that's how we like to do it. Strike is 345. Exact strike that we were assigned at. Limit price is going to be, I'm going to do 360. We're going to get that other number, so it's going to be good to go. Conditions none. Preview order. Broadcom. Sell to open 2, December 26th. We should. Alright, we're going to go ahead and sell some of those hood call option strategies because hood is up today. We did a really good job with that. We're going to go ahead and try and sell hood as well. We're going to be less aggressive with this because this is going to be extremely out of the money for hood. One of those things is because of the fact that hood is significantly decreased. Robinhood significantly decreased. We still believe in this stock. We have a lot of conviction for the long term, but we are now hoping to turn this around at a much better call price than we can currently see. So let's go back to the levels we were signed at. I'm going to sell one here. I'm going to sell one here. I'm going to sell one here and sell one there, and we're going to go ahead and preview this order in a trade ticket. Those are our two strike prices. Sell to open, call, strike 131. Should be pretty simple. Net amount, net credit, right? Sell to open 2 calls, both at the 131 strike and 133 strike. Midpoint we can say $73. So quick $70 for the end of this week. If it hits it, great. If not, it's also great. I'll preview that order. Go ahead and place this order. Again, we're going to keep collecting a little bit over time. As we collect it, we're going to go ahead and get closer to the money and keep collecting call option premiums at the strike that we were assigned at. Now that we've done that, we can do some more research as to what's coming up next. Alright, so we saw ABGO hit that ex-dividend day today. A lot of good stocks did this today as well, so we can keep going and see that there's plenty of options we could have chose from, but ABGO paid a 0.71% dividend yield, 65 cents per share, so we should be looking pretty good with those 200 shares that we were signed on. Next week, starting December 28th, we see that Micron here is going to be going on sale, and Micron's been on a tear because of their higher earnings, so let's see if we can get into Micron today. Note that we have to make sure that Micron is going to be down as far as its daily current price earnings. Unfortunately, it looks like it's not been going down. It's been going way up. So right now, it's probably not a good idea to sell a cash secured put below this lower price because we're not going to get good premiums. Right? This is constantly going to go up. If this were a down day, we'd sell a cash secured put, no problem. Unfortunately, the price is just going to keep going up and up, and we're not going to get a decent premium on this. So then what do? We have to go to some our other stocks that we look at. This is just a subset that I like. Apple, Amazon, Meta, Micron, IREN, Iris Energy, SoFi, Celestica, as you already saw, AMD, Palantir, APLD, MSFT, Uber, MSFT, Microsoft, right? Applied Digital Technology, Oracle, Netflix, HIMS. HIMS we've been less bullish on. It's not been doing great for us. We have those cash secured puts that were called and assigned, and now we have a call option on them, hoping to get back to break even. Until then, we're just going to continue collecting premiums. But as you can see, Apple's down 22% right now, so I think that might be a good candidate. So let's go back. We're going to do puts this time. We're going to sell puts. Again, week out, we don't want too much craziness happening, right? We're going to go back to our bar chart. We're going to do AAPL, expected move, and we're going to see that the expected move here, the lower price, is 269 at the end of this week. So what we can do now is go back to our options chain, and we can see that we want to do puts, and currently so that would put us around here. In between these, we can go to the next strike, the 20 delta, and we can say we want to sell a cash secured put for Apple down here. Again, if we get assigned, we're not worried. Apple's a great company. We're always bullish on this show, so we can always get called here. Let's go ahead and preview this data ticket. We have quantity sell to open, one put, 2650. Limit type. Alright. Let's go to the ask here. It doesn't really matter, it's $1. Collect $53 to sell an option put. It's not a high volume trade. We're not going to get a lot of money off of this. Sell to open, December 26 put, $53.35. Place that order. Awesome. So that's pretty much it. Got about $3,000 in about 15 minutes for you, and you're going to be sitting happy at the end of Christmas, counting all your dollar bills. And if you get assigned, we're just going to do the same thing next week. I'll let you know how those two trades went with Celestica and for ABGO. And if you guys have any questions, please leave them in the comments below. Thanks for stopping by. And feel free to like and subscribe.